I mean, do you believe any validity in TA? Because it's kind of like, I feel like it's exactly like astrology for
It
the
is.
white male population.
It's astrology for traders, that's for sure.
Yes, yes.
And I call it that all the time. But in terms of like actually having validity to it, it's kind of like an open-ended question on market efficiency. I think like if I had, because like the more efficient the market is, the less tradable information there should be in a, or less predictive rather information there should be in a prices signal, right?
Mm-hmm.
So depending on where your stance is on market efficiency, that might mean like, oh, fundamental analysis is bullshit, or technical analysis is bullshit, or even like insider trading will give you a meaningful edge in the long term. Like it depends on where you stand. Where I personally stand is like, I think there are some indicators that have predictive power, but they go in and out of being effective. And
Mm-hmm.
being able to detect like how effective an indicator is and when is an extremely complex problem that I don't know there's an accessible solution to. When I got started, like as a trader before I even came to Tasty Trade, like when I got started learning about finance when I was still in my PhD program, like technical analysis is actually mostly what I did. Because like if
Mm-hmm.
you were to train machine learning models or neural networks, a lot of the times they use technical indicators to trade based on price information. So when I started getting into finance, that's kind of like where I started, but I never really found a way that consistently worked. It's something that I want to revisit because like we can even see this as like volatility traders. When you see like a big down move in the market, you can see that that can be indicative of more down moves in the near future. Like, so there is a certain amount of predictive power. It's just depending on how strongly you want to use that as a signal. So
Mm-hmm.
if that makes sense.
I remember back in 2020 and 2021
Mm-hmm.
when I was trading the COVID era. I was following this guy Gregory Manarino, and I love this guy.
Mm-hmm.
He's just like, I don't know what he does pre-market, but he just gets on and just says the world is ending and just has a bunch of crazy takes about
Like
how the
that, yeah.
Fed is just buying it all and
Yeah.
just a bunch of gibberish. And then he's like, all right, we're going long crypto, long silver, long gold, long oil, just
Mhm.
long everything that's like against the Fed, and you become your own Federal Reserve, whatever,
Yeah.
blah, blah, blah. But anyway, he has some good stuff. And one of the things that I noticed I took from him is he has like this system, this quant trading, momentum trading system that
Mhm.
worked really well in 2020
Yeah.
for day trading SPY or SPX.
Mhm.
It's on Thinkorswim, not on Tasty. Well, now it's Schwab, or is it still called Thinkorswim? Whatever. It's on Thinkorswim. Do you know what Renko charts are? It just shows the price, doesn't show any volume, doesn't show any like time. So like here, I could like pull it up on here. I think there is a Renko chart. Yeah, here we go. Beautiful. Yeah. So if you take a look here, it kind of like smooths out price action, kind of just shows you when the price of the underlying crosses. Um, Instead of just I don't know, it kind of like allows you to see support and resistance a little bit better. But again, just I don't know. I mean, I drew this, last stream. Was I on stream with you or Jonathan? I think it was
I
Jonathan.
think
I
it was
drew this.
Jonathan last one, yeah.
Yeah, I drew this like little like my prediction of where the S&P is going to be going heading forward, and it seems to be playing out pretty good. From I mean, as far as I can say, I just see a dip down to 4,600, and then like some
Mhm.
sideways action, and then the shot to over 5K. Seems like it's working out pretty well. Again, like technicals, I take them with a grain of salt, just like how you were saying, because I feel like you can map out where you believe an underlying, like you're placing your bets on where you think the underlying will go
Mhm.
based on where it's been, but that's a fallacy because historic data doesn't predict future results. However, we're talking about the market here, and in the long run, 10% per year has to play out somehow. And so within a small frame, you're going to get rapid price movements that don't really make sense, but with an upward drift.
It's not like perfectly a 50-50 normal distribution, but like there's
Mhm.
there's some drift that kind of like, and you see that in the statistics where like the market returns are up like 55% of the time, not exactly 50 or something like that. But then on the other side, you'll see like markets that really significantly deviate from these models. And we know that they did like look at like Tesla or something, for example, when it was kind of getting squeezed and how much that deviated from a lot of like theoretical expectations around the market because there was herd mentality that is not consistent with like your typical Black-Scholes Brownian motion situation. You
Mhm.
know what I mean? So like that's
Right.
why you gotta take the models with a grain of salt. But like even with regards to like picking price targets, like you have to do that as an options trader as well. But
Mhm.
Like typically what we'll do is like we'll use investor estimates for price targets, which is like when we're looking at like where 16 delta is, how far it is from at the money, like
Mhm.
all those statistics that options traders use, we're using investor expectations around skew, around price movements over certain spans of time and that kind of stuff.
And
So
that's derived from the prices of the options themselves,
yeah,
correct? Yeah.
exactly.
So you use the expectation that traders are placing on their bets within the options markets,
Mhm.
and that's where you derive your expectations from. That makes sense.
Yeah, and that's like and which is still, like, not perfect, right? Because
Mhm.
like, you'll see all the time when, like, the expected range is tight, and then COVID happens and then blows past the expected range, for example, or, like, a move that's, unprecedented, from something that wasn't super predictable or something like that. But you still, like even, like, options traders still do need to find estimates around price targets. We just might do it maybe less with TA or maybe less with fundamental analysis, but with options prices instead. Everybody
Mhm.
kinda, like, has a different system, though. It really depends on how you trade.